Good morning, everyone. This is Travis with the Spoon from Carter Cow Trading, Carter Cow Capital on YouTube. Hope everybody's doing very well. We're going to go ahead and start off and get started right from the beginning. There's a lot of stuff that's actually happening as we speak in the overall market. I want to make sure we go ahead and get our eyes on it and see if we can be able to make adjustments if we need to. So I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education. From that education, you can be able to make your own informed decision. I understand the Forex involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you'll end up making money today. So with that being said, here is the headline that I just seen when it comes down to the overall news. Bernard says preliminary trial data shows that the coronavirus vaccine is more than 94% effective. Now, what does that mean? That means that people are going to end up start putting their money in risk on positions when it comes down to the overall market. Also means that what we're going to end up seeing is that things like the U.S. dollar, things like oil is going to end up actually going to, oil is going to start picking up. The U.S. dollar is actually going to start picking up, and a few other things like that. And the stocks and the Dow should be able to raise when it comes down to overall positions. So this is actually news that I wasn't necessarily trying to look for, especially going into the opening today. So we're going to see how that's going to end up affecting the market. But overall, we'll see how everything kind of plays off and kind of go from there. Now, if you're new to what we end up doing here, what we end up doing is we actually end up taking a look at Forex, and we look at indice pairs and try to see if we can find some overall opportunities to be able to trade and be able to go from there. If you're interested in being able to learn a little bit more about that, or be able to learn how to be able to trade in the Forex market in general, you can be able to hop inside of our bootcamp class. Our bootcamp class is actually going to start next week, November 23rd to November 27th. It's going to go from 9 p.m. to 10 p.m. I'm very interested in being able to have everybody there and being able to join us. CISA really filling up very fast when it comes down to that. If you are interested, you can be able to go to this link inside of, I'm going to send this actual Facebook link so everybody can be able to see exactly what we're going to end up doing from there and be able to hop in with that. The next thing that you can be able to do also is that you can be able to go to the purchase link if you're interested in being able to go. Literally, it's going to end up being $20 per session for 5 days. Basically, that ends up coming out to be $100. But each and every day is going to end up being action packed, and it's going to be well worth your overall investment for being able to get in if you're interested in being able to do that. So get ready and link over to both of these so you can be able to have these. Both of these are actually in the chat box. If you have any questions today, also make sure that you end up tapping inside of the chat box, or just say hey as we go through and get everything else done. Now, let's go ahead and take a look at these pairs and let's talk about what's going to happen today, because we really need to get our eye on gold and a few other pairs. If we look at it, Japanese yen ended up having that GDP. As expected, I thought that news was going to end up being very good for them. That news was very good overall. It wasn't better than the 44% that they had consensus at the beginning, but it ended up hitting 21, which was very good. The GDP actually ended up being above 5, which was very good as well. So that means that they're starting to push back up. If we take a look at what's going to end up happening today, Governor Lowe is going to end up speaking a little bit today, and we're going to end up having meeting minutes. That's going to end up happening a little bit later on today as well. So just make sure that you end up getting your eyes on that. Take a look at that. That will affect the Australian dollar a little bit more, and we'll go from that pair. Now, what I want to go ahead and do is take a look at the U.S. dollar, take a look at gold, and see what's happening with oil as well. We actually ended up taking some sell trades we took a buy trade on gold, took a sell trade on oil because of their overall positions. Want to see if they're kind of playing out to be the same. And then after that, being able to go from there. Let's take a look at the dollar first. Obviously, any type of good news when it comes down to coronavirus testing is going to end up favoring the dollar and how it moves, and that may end up being a quick shock and awe type of movement, or it may end up being a movement that will end up allowing the dollar to get back stronger. But if we're looking at this from a weekly perspective, what is happening is this: the market actually end up making a move to the downside, basically end up going inside a consolidation, tried to push past that consolidation earlier during the week, based off of news that ended up happening on from Sunday to Monday again, and then after that rejected the rest of the week. If we look at what ended up happening right here, we end up seeing that same deal. Right now, we end up having that news. We're going to see how that news is going to kind of affect the overall dollar, especially when the stock markets open up right around 9:30. We want to see if that's going to end up being a reason why the market may end up pushing back into the consolidation. As long as this market holds below this overall support line, then things like gold, then things like a few other pairs like that will be trading against the US dollar will actually end up remaining to be intact. But that means that also you'll look at some of the like the Dow and a few other pairs like that, they actually should be good when it comes down to trading to the upside. So have to keep that in mind overall. I'm still going to say that this market will still be bearish overall unless it ends up breaking back inside of this overall zone. If it breaks back inside of this 11,970 range and pushes to the upside, then that's something that we have to be able to talk about for being able to change our mindset. But we have a counter trend line break that actually ended up happening on Friday, and we have a movement to the downside. So even though the market is somewhat in the no trade zone, I do expect that we may end up seeing some overall downside movement. But we got to keep that in mind as we look at some of these gold pairs and be able to take a look at that overall. And keep that in mind when it comes down to trading these. Next pair, let's take a look at oil. Oil has been nevertheless weird, and that's the best way to be able to say it. We have been looking at resistance from this. We have been looking at some consolidation from this overall pair. That consolidation has been from 41. From the 41.35 area all the way down to the 37 area. The times when we don't trade it, it actually falls down. The times when we do, we end up getting one quick drop, and then after that, the market starts to move to the upside. The reason why I thought it was going to keep on pushing to the downside was because it rejected from this overall area. I rejected into the 41 area, and then after that started to move down. Consequently, we end up seeing at the beginning of Sunday that the market did not move and did not have that much space of overall movement. And with this overall news has pushed the market back out of this overall resistance. So to me, I am officially out on oil for being able to make a trade manually. I actually ended up closing out on the last pair of trading that we ended up doing. I actually ended up losing $200 this morning because of that overall pair and the way that it ended up moving. I was looking for more movement to the downside. We did not get that. Currently, the market is at 41.60. It has broken out of resistance again. Now it's proven out. In this case, it would be considered to be bullish. But with it being considered to be bullish at this particular point, if you did not get into it early, you have no trading. You have no trading move at this particular point to be able to get in, unless you're looking at being able to buy up to maybe the $48 a barrel mark. But it has to break past 44 because they haven't broken past 44 in a while. So if you look at being able to trade this one to the upside, I would say if you're trying to trade it, I would trade it up to 44 and see if it could break that overall position. But right now, I think that it's too volatile to even make a move and make a decision on this one unless you're just trying to scalp the market. If you're trying to swing trade like I typically do, I would probably stay away from it. If you're trying to scalp the market and you see that movement, then go ahead and take the scalp. I'm going to go from there. Let's take a look at what's happening with gold. I've been talking about gold for a while now, and everyone that knows me has been hearing me talk about gold for a while now. And this is what's happening. We look at it from a weekly perspective. I see that the market has been bearish. Market was basically in the buy zone. It ended up breaking out, and then after that, we end up having a bearish. We end up having a bearish candlestick to be able to retest. That retest did not hold below the actual purple trend line. Because it did not hold below the actual purple trend line, then that market considered to me to be bullish and remained to be bullish. The market opened up on Friday above this overall candlestick. The market opened up this morning above the overall candlestick, basically pushing up to almost to the 1900 level. Now, it has rejected since from the 1900 level. Currently, the market's at 1962. And currently, I'm looking at it right now. Currently, the market's at 1961. For my masterclass students, this is very simple. If the market ends up, if you're in primarily buys, if the market ends up breaking past this 1970 area and start to push below, then that means that I will probably look at getting rid of some of the buys, not all of them, but I would look at getting rid of some of the buys. If the market holds and stays in, just stay firm on what you're doing and go from there, and just let the system basically do its thing. If you are in primarily sales and the market has been pushing down, then quite frankly, you should be happy. Just allow the market just to be able to do your thing from there. Once again, we're looking at a projection on if this market stays above to be able to get up to the 1920 area, to the 1960 area, and then possibly up from there. But we're going to see a lot. We're going to see a lot of buyers come in inside of this market and basically end up holding this area. If that happens, then after that, we'll look at being able to push up and go from there. But right now, there's a big fight for this overall movement, and I think obviously, anytime that you end up hearing any type of good news from medical companies or anything else like that for the coronavirus and all the other stuff, then that means that that's news for the U.S. dollar. That's not news for gold. Gold is a pair that is used for fear. Gold is a pair that's used as a safe haven. So as long as things are going bad for the underlying country, economic wise or anything else, then gold actually goes up as a safe haven. If it doesn't, then after that it falls back down. That's why we end up seeing this big old bearish candle wick, because we end up having that news having that news last week. So I'm kind of interested in trying to see how this thing is going to end up playing out. Currently right now, I don't like what I'm seeing. I'm actually down on this overall pair. Obviously, because I was anticipating a move to the upside, but we end up playing it out and kind of seeing how that moves. We're going to take a look at the NAS 100. I'm still going to keep my eye on that pair. Obviously, for the people that's in my masterclass, I'll let you know what my thoughts are, especially if you end up taking a route that I took. If you did not take the route, that I took, then quite frankly, just stay with what the system is actually doing, and go from there. So let's take a look at the NAS 100. NAS 100 is in a position where it's in a no trade zone on the daily. As we look at it right now, what we can be able to see is that this market was, from a weekly perspective, expected to be able to go down. There's a that has not been broken at 12,004, basically 12,450. Currently right now, last week, the market ended up, or 2 weeks ago, the market ended up pushing bullish out of this overall zone, retraced again, and then after that, broke past the zone again for the counter trend line break bullish again, based off of the news of what we ended up talking about a little bit earlier today for the actual, news for the vaccines and everything else. So what's the next move? What's the next thing that we're looking at? Overall, what I would end up looking for is, if I'm looking at being able to buy, I would like to be able to buy up to 13,242. Currently, the market, after we end up having that news, really didn't make that much of a movement from here. We actually end up seeing a rejection of that movement. Now, this is kind of expected, because if you're looking at it, we're kind of seeing a little bit of a king's crown, meaning that this market ended up going up, breaking past, hitting a D extension, broke a, then retrace right back. This would be considered to be the right tip of the crown, which means that we expect to see that the market will actually fall from this overall position to the downside, and that has subsequently started to happen for this overall move. Now, it has to break this overall trend line right here. If it doesn't break this trend line to the downside, then the market will remain to be bullish, at least for the short term at this particular spot. So I want to see how it's going to end up reacting to this overall spot. I will not touch this as of yet until I end up seeing how this market is going to react to that spot first. Okay, so NAS 100 out of that pair, not looking at being able to get in. Let's take a look at some US based pairs, and then after that we'll kind of go from there. Overall, based off of our projections, based off of being able to look at it, and with the original news that was happening earlier today, we end up saying that overall the best trade to be able to take a look at was probably the US yen. The US yen was at a 91% for a trade for it being able to get in, and we'll go ahead and take a look at that one first and see if that remains to be the same for this overall pair. Once again, remember, if gold ends up getting stronger, then that means that the Japanese yen gets stronger, which means that the US dollar is going to end up going down when it comes down to that pair. Currently, right now, what we can see is this. Based off of the weekly, we see that this market has been moving through this downward channel, and has been bearish, and it has been moving bearish from that spot. There's a open D extension that is expected to be able to hit 99.20. There's another sub D extension at 101.72 that is expected to be able to get hit. 105 has been in one of those areas where the market has basically ended up using as strong support and strong resistance. It's a pivot level. Currently right now we're basically at that 105 area and being able to take a look at that. So the market is considered to be bearish, but we're going to see how the market kind of reacts and kind of moves based off of that overall spot. We take a look at this from a daily position. From a daily spot, we can see that the market is getting closer to the sell zone. The market actually ended up pushing up bullish based off of that news last week. This was that huge candlestick news for us. The market actually moving up. We see the same thing that is happening right now, but we're not seeing that same continuation of this move. I don't know if people are going to end up getting tricked out or faked out on this one for a second week, but we have to be able to see how the market's going to react at 9:30 to kind of get a better mentality on how people are going to end up reacting to this. If it keeps on moving bullish, kind of like what ended up happening with oil, where oil's up at 41.87 at this particular point, then that means that the US dollar is going to end up getting stronger. And that means that we should be paying attention to the move of the US dollar getting stronger overall, and going from there. Currently right now, the market is close to the sell zone, and it did have a counter trend line break. With that counter trend line break, we was looking at being able to sell if we got a high price on the 2 hour. And if you end up trading this as a counter trend line break for this overall move a little bit earlier, this was your get out move right here. If you have not gotten out toward this overall position, we can see that this market is resting above that 104, basically at 105 area at this particular point. If you were not in, I would not get in. If you're looking at being able to buy at this particular point, I wouldn't necessarily look at being able to do that. But if you want to scout the market for 30 or 40 pips and that's your overall plan, then obviously you have an overall strategy and this runs your strategy. Me personally, I wouldn't necessarily look at that. So the projections of that have basically ended up subsiding, and I'm off on the US yen. Let's take a look at the Euro United States dollar. Euro United States dollar is still in an R4 consolidation area. With the market being in an R4 consolidation area, this is very simple. We're looking at this overall market. We see that it's in a consolidation no trade zone. Because it's in a consolidation no trade zone, we do exactly what we do. We don't trade. We allow the market to be able to fall to support or go up to resistance, and then after that be able to make a trade from there. Everything else does not matter. The same thing is happening with the US Swiss franc. The market is in a consolidation no trade area. We can see heavy support right around the 9,200. We can see heavy resistance right around the 9,200. We can see heavy support right around 90 cents. And the market is basically at 91.38. So any trade at this particular point, quite frankly, is just giving away money. So what I would end up doing is I'll just wait and see if the market is going to end up falling down to support and then look to be able to buy again. If that does not happen and the market ends up pushing up towards the resistance level, and then after that breaks above the resistance level, then I'll look at being able to trade it from that standpoint. So if it does that, then I'll buy off the retest. If it falls down to this overall area at 90 cents, then I will look at being able to buy like we should have done last week, right at the support level, and be able to go from there. Okay, so this market, I'm out, not looking at being able to trade it as well. Pound United States dollar is expected to be able to push up to 133. Currently, right now, we can see that this market is in a breakout area, starting to retest. Currently, the market is in the sell zone. With the market being in the sell zone, we're probably going to end up seeing a little bit more sales, but overall, the underlying market is bullish. So right now, this is basically in a no trade area as well, for us not being able to look at positions. US Canadian dollar, oil is starting to get a little bit stronger. We're seeing oil starting to get a little bit stronger. Then we should see that the US dollar, we should see that the Canadian dollar start to get a little bit stronger. This market has been moving bearish. The market has been going through this consolidation move, but the underlying move before was actually bearish. So we're looking at this overall pair. We believe that the market is going to end up pushing down to the downside. We got in at 134 last week and sold it down from that overall area, then you would have been good. Currently right now, you would have been up about right around 300 pips towards the downside. Currently right now, we see that we have a counter trend line break that is starting to form, but this is a daily chart, so you'll have to wait until 5 o'clock to be able to be truly for it to truly be able to look at a full action of a move toward that end. If you're looking at being able to scout the market on a 2 hour, the market is in a buy zone. So quite frankly, you missed your opportunity unless you end up getting in right around 2 o'clock this morning or even on Sunday with this movement to the downside. I do expect that this market will pop back up. So quite frankly, I don't think that's the best position to be able to get into either at this particular point. So I'm going to hold off and say that I'm not going to end up looking at being able to trade on that pair overall. Okay. Let's see. Australian dollar. We might be able to get through all of them. Australian dollar, we looked and seen that the market was in consolidation. We end up seeing that this market actually ended up breaking out of this overall resistance level to the top side. And since then has basically retested and turned past resistance into future support, and the market is starting to move to the upside. That's actually a good thing for the Australian dollar and being able to push up. It's not a good thing for the dollar overall. And if you're looking at being able to buy, what I would look at is that I would look at this more as a scalping type of trade. From an ATR standpoint, this market only moves 75 pips a day, so quite frankly, it may not be the best move to be able to get into if you're trying to get into it right now, because the market has already done moved up from this range about 46 pips, so it's only about 36 more pips to be able to go. But there is a counter trend line break that is forming right here at this particular point. The market remains to be held, and we should see that this market will go up to the 75.50 area for its overall movement. But once again, this is one of those trading pairs that the market was in the sell zone. So even though it broke out of stock, there we go. As I was saying, if we're looking at this overall pair and thinking about what we're going to do for its overall trading, that this market is leaving the sell zone, so it's expected to be bearish for a little bit for its overall movement. Overall, from that standpoint, I wouldn't necessarily look to trade it if you're just looking at a stochastic. But the stochastic really doesn't matter when the market is leaving a consolidated zone. So I would look at the breakout of being more of wait and see if the market is going to end up retesting and then being able to push and be able to go from there. So if it holds above, then that's a good thing. If the market does not hold above from this overall position, then we have to look at it in a different manner and be able to trade it in a different way from there. So from this position, I'm not necessarily looking at being able to trade that one as well. So we're done with all the US based pairs. That's pretty much what we have for us. That I want to get back into gold real quick and see what's actually going on with this overall pair. Like I said, I said to myself, I'm going to end up making a decision on how this market is going to end up reacting. Currently, right now, the market is holding above, and it's holding above that 1870 area. Anything below right now would end up being a bad move for gold and a good move for the US dollar. So anything past like the 1870, 1868, anything below that, back down to the 1850 area, would not necessarily be the greatest move if you're primarily looking at buying. If you're looking at selling, then quite frankly, hold on to your positions and basically just run it from there and go from that overall spot. I'm seeing that the market is holding, but we got to see how the market's going to end up reacting for the rest of the day. Going into tomorrow, we'll see that the market will end up being in the buy zone. Maybe this might be the last push for people that are actually selling to try to see if they can try to push below it. And maybe we might see that more buyers may end up coming in and being able to push this up long term. So I am interested in being able to see what happens with that. I am going to hold my position and see how we're going to end up playing off of that. For the people that are looking at buying long term, this may be one of those positions that you can be able to get into for us being able to buy and basically allow yourself to be able to allow the market to be able to ride up. I know last week we ended up getting in at 1855. The market has not hit 1855 as of yet. And we're seeing that the market is holding at 1874. So some of our positions should be, some of your positions should be up. Some of your positions right now should be down because obviously we end up seeing that it pushed toward the high range at 1890 a little bit earlier. So that's where we are when it comes down to that pair. Like what I ended up saying a little bit earlier, if you're interested in what we end up doing each and every day for being able to trade, you want to learn, want to put yourself into a position to where you can be able to create your own income. Learn how to be able to automation trade. Learn how to be able to create passive income. learn how to be able to protect yourself in the overall market when it comes down to this. Hop inside of our Believe in Yourself Bootcamp. That's going to end up going from November 23rd to November 27th from 9 p.m. to 10 p.m. It will end up being on live stream. So quite frankly, you can use your phone, you can use your computer, but I just want you to be there, right? You don't know if you want to be able to trade unless you end up putting yourself into a position to be able to learn and see if this is something that you want to be able to do. And this is something that I can truly tell you from the bottom of my heart. Forex trading in general is the best bang for your buck investing that you can be able to do, right? Being able to learn how to be able to do it yourself